Ladies and gentlemen, welcome back to another video. I'm your host, the Dividend Aristocrat, and today we're going to be talking about the dividends I received in the month of December 2023. With that being said, let's jump right into it. So taking a look over here, we can see how many dividends I received in the month of December. 13 total positions had paid me dividends this month, and it's the biggest month I've had yet. I think we can delve into each individual holding real quick, take a look at that, take a look at some of the dividend history, and then we'll jump back into my portfolio. So jumping right into my first position, this is one of my favorite stocks that I own. It's Visa, got paid on the 1st of December at a total whopping $1.05. It's a very small dividend because one, the company doesn't pay large dividends, as you can see right here, but two, I actually only own 2 shares of this, unfortunately. I wish I would have picked up more, but I had not, so that's what I get to keep in the meantime. The 5-year growth rate is phenomenal, sitting at over 16%, and they've been continuing increasing those at a steady pace, and dividend growth history is great at 15 years. Taking a look at the second company that paid me dividend this month, it's Intel Corporation. It was a very small dividend, especially since they cut it recently. And if we take a look at their dividend stats, we can see that their payout ratio is a whopping 160%, and their 5-year growth rate is negative. Also, their dividend growth history is at 0 years, and that's, like I said, because they cut that dividend. But people are looking at this as a turnaround play. Perhaps they can raise the capital they need now and focus on building up the company once more, really investing in themselves. So I'm going to hold it for now, but we'll see how it goes. The next company that paid me a dividend on the same day is Ford. I'm not a big fan of this company. I'll just say that up front, $1.15. I think their margins are too small. I think their dividend's not consistent. I bought about 7 shares, which really isn't much, a while back, and I've been holding it since. I might keep holding those shares for now, but I'm definitely not planning on buying any more of this company. The pay ratio is not too high, but the growth rate is pretty insubstantial, and the dividend growth history is only 1 year. Now on the 11th of December, I got one of my best dividend payments this month, SCHD, which is the Schwab Dividend Equity ETF. That was $44.41, amounting to over half a share of Schwab reinvested. But the 5-year growth rate here is a phenomenal 13%, which is amazing for an ETF because, as you guys know, those tend to fluctuate a lot more, and a dividend growth history of 12 years, which again is great. Right now, you can pick this up for a dividend yield of around 3.5%, which is amazing. And then on that high note, we're going to move into another company which I do not like as much. It's Target. Target paid me a dividend of $6.66, amounting to less than 0.1 of a share, actually 0.05 of a share. Target has a great 5-year growth rate, and that was mostly, I think, because of COVID, the pandemic, all the shopping that was going on at Target, especially for cleaning products. And their dividend growth history is sitting at an amazing 55 years. But if you look at recent years, their dividend growth rate increases have gone down substantially, and management may be making some decisions that are not necessarily helping the company itself. Moving right into 3M, if you guys can see the pattern here, there's a lot of small dividends because for some of these companies, I bought only 1 or 2 shares. Like 3M, I bought only 1 share. That was kind of as a value turnaround play. I bought at 125 thinking it was a good price. Of course, it had gone down substantially since then. I haven't really bought more into it, not because I don't think it's going to turn it around, just because I think my money can be better allocated elsewhere. If we take a look at that dividend growth history, it has 65 years of consecutive dividend growth, which is amazing, I will say. But if you look at their growth rate, it's less than 2%, and it's going to continue going down. And now let's quickly look at S&P Global, one of, if not my favorite holding that I own right now. I got a dividend of $4.51, which is not a lot for the amount that I have invested. But that's because, as you can see here, they have a smaller dividend yield at 0.81%, but their growth rate is very good, sitting at over 12%. Their dividend growth history just hit 50 years, making them a dividend king, and they have a payout ratio of 29%. Jumping into Northrop Grumman, and sorry if I'm flying through this, guys, but I don't want to make this video too long. This is another defense company that I do own. I also own General Dynamics, as we saw in a previous dividend video. I spoke about that. I got a dividend of $1.88. I like this company a lot. I like the work that they do. I think their growth rate is pretty good at 9.33%. They have a dividend growth history of 20 years and a low payout ratio. I think they're going to keep increasing this dividend for years to come. What I am considering, though, is liquidating my General Dynamics and my Northrop Grumman position and instead buying Lockheed Martin. And then taking a look at Microsoft, I bought this company when it was very low, trading I think the low 200s. It was a very good price for me. I'm very happy with it. The dividend is very low, just like a lot of my other holdings. It has a low dividend yield of 0.8%, but a nice 5-year growth rate of 10%. What I like is they're still focusing on the dividend growth rate, which it seems like Apple is not. Apple's focusing more on buybacks. I like seeing my dividend grow each year, and I like when it grows quickly. So with that dividend growth history of 19 years and a low payout ratio, I think they're going to keep doing a phenomenal job with this company. I own both Lowe's and Home Depot. We did take a look at Lowe's in a previous video, but this time Home Depot did pay me a dividend this month. I like owning both companies because they hit similar similar markets, but just are slightly different, have different potential. If you can see right here, Home Depot is a very good company with a dividend yield of 2.4%, a nice payout ratio of 13%, which is extremely low, similar to what Lowe's has, and 5-year growth rate of 15%. All right, only a couple more stocks left to look at. I know it's a long video, but we have Coca-Cola right here. I only own one share of this. I've talked about it before. I'm going to keep this short, but basically I'm looking to liquidate this position. I had bought it at a pretty good price, that one share, but I just don't think that Coca-Cola is a stock for me due to my time horizon. And second to last, we have my heavy hitter VOO. This is where the majority of my portfolio lies by far. And it paid me a dividend of over $50, amounting to 0.115 shares of VOO being reinvested. The dividend yield is pretty low at 1.45%, which I like since this is in a taxable account. And the 5-year growth rate is at a not so bad 6%. So I'm happy with that. With a growth history of 3 years, again, this company is focused more on some growth stocks, so the dividend doesn't always grow as consistently. And looking into my last position, I have Union Pacific, another situation where I only own one share of this company, which is unfortunate because I bought it at a very good price, sitting at around $190, and I'm up a nice 30% on this position, I do believe. Union Pacific has a nice 2% dividend yield with a payout ratio of around 50%, which is not too bad. They have a 5-year growth rate of 11% and a dividend growth history of 17 years. I want to see where this company goes because they have announced a new CEO stepping up to the plate, so we'll see how that goes for them. The one thing I will mention is I am considering liquidating this position since, once again, I only hold one share of this company. I don't think it's a substantial position that I necessarily want to hold, and I don't mind diversifying, but I think this money could go elsewhere just to make my portfolio tracking a little easier on myself. And hopping back into my portfolio dashboard, we can take a look at some of the portfolio statistics. So far, I've invested just shy of $26,000 into the portfolio, giving us a portfolio value of around $32,500. That gives us an unrealized gain of about $6,500 or a 25% total return. The dividend earned so far has been $735 with a yearly income of $633. That means going forward, it'll be earning that much. The portfolio yield is currently sitting at 1.95% with a yield on cost of 2.44%. The yield on cost is slightly higher because I bought some of these stocks at a lower price or better valuation than what they are today. And as we can see here, MO is one of my losers. It has a lower yield on cost than the yield that you can pick it up for right now. And we can take a look at our amount invested and dividends received for each single year. For 2022, you can see how little those dividends were and how little I invested. But going into the newer years, you can see how much more I've been investing. This year, I end up making $466 in total dividends, which is about 144% increase when compared to last year. Of course, I should mention that most of that increase does just come from investing more money. As you can see, I invested about $10,000 these last couple years. So that's been basically doubling my portfolio, which would of course double my dividends, and any sort of dividend appreciation that we got would help as well. The monthly dividend trajectory here has been pretty positive. Of course, December is my highest month yet, coming mostly from VU and Schwab, which are two of my biggest hitters in the portfolio by far. Schwab is kind of creeping up. Texas Instruments and MO are not to be slouched on as well. They're doing very good jobs themselves and giving me some nice dividends. Looking at my specific weighting by holding, we can see that VOO is by far my largest position, followed afterwards by SCHD, and then some of the other big ones I have right now are S&P Global, SPGI, and Texas Instruments, or TXN. And for the sector weighting by value, I'm not going to go too much into details here, but you can see that ETFs are my largest position. So hopping into my pie sheet, we can take a look at my portfolio, which is sitting at $32,000 with a cash position of $2,800, which is about 8% of my total portfolio value. The keys to success, divine dividends and speculative sections, are just how I like to divide my portfolio up. And that way I can see my allocations. I can have my target allocations compared to what it actually is sitting at, and it helps me better design my portfolio. I do use Vanguard as my main broker. So because that's a little more of an old-fashioned platform, that's why I decided to make this Google Sheet or spreadsheet in order to better track my portfolio. And I was thinking we could take a quick look at my monthly dividend history. So we looked at it earlier on the dashboard, but it's a better example or a better view of that same graph showing how quickly it's been increasing. December 23 is going to be my largest dividend for a while. Afterwards, I'm expecting some smaller dividends for upcoming quarters, but I'm looking forward to December, of course, of next year. And then going down here, we can see that in October, I invested a whopping $2,600, which for me is a ton of money to put into a portfolio. November, only $213. And December, I actually contributed $0. That's because I think the prices are a little high right now. I'm not sure what's going to happen next, so I don't want to delve too hard into this. I'm going to sit on the sidelines for a little bit and see what happens in the new year. And then for this month, of course, I did earn $121.04 in total, which is amazing. And I'm super happy about that. I love seeing that increasing over time. So I just want to hop into this section real quick to show you guys how I keep track of my dividends. Right here, you can see the dates of which I got paid. These are all for December of 2023. 13 different positions, paid 13 different dividends. And if we zoom in on SCHD, we can see a $44.41 dividend, which amounted to a reinvestment of 0.61 shares. This just helps me keep organized. This helps power the rest of the spreadsheet. So each individual sheet is usually based off of some sort of value coming from this order history section. And last but not least, I thought we could jump into my future valuation calculator. It's a fun way to kind of envision what this portfolio could potentially look like in 20, 30, 40 years. With a starting principal of $32,000, which is what I have right now, and my expected annual contribution of $12,000 and the current dividend yield, we can set an expected dividend increase hopefully of about 6% per year with a price appreciation of 8%. That will give us a pretty large value. Let's look at our 20-year time frame. We'll be expecting $9,000 in dividends each year after the 20-year mark. But if we want to go forward and see how much would be in the 40-year, you'll see how much more substantial it's going to become. So at 40 years, if you can hold off that long, your dividend income will be $33,000 a year, and your total dividend earned by that point will be $477,000. I just want to thank all of you for watching this video and tuning into the channel. I really hope you did enjoy it. It took a while to put this thing together, so I just want to make sure I get that information out to you guys so you can see how my portfolio is performing. Also, definitely let me know down below what your guys' biggest payout was for this month and what payout you're looking forward to in the new year. Also, if you want to share how this year was for you, I know a lot of us had pretty crazy returns, so make sure to comment that down below. Aside from that, some of you may have noticed that I did change the color scheme of my Google Sheets, so let me know what you think about that. It's a lot more bluey, I guess, right now, but I think it's neater and a little bit more clean than before. And if you have any recommendations for the channel, whether that's content or just feedback, please let me know down below. I really appreciate that. Other than that, thank you guys for tuning into the video, and I'll see you in the next one.